Hey guys, what's up? It's Brian Trippe here. Before we get into this week's podcast, I want to make a very special offer to you. A lot of you have been commenting on my t-shirts. Some of you guys that watch the YouTube videos commenting on my t-shirt that says cash flow. On the back it says REI Live. I would love to give you a free t-shirt, no strings attached. You don't have to pay for shipping, anything. I want to give you this free t-shirt if you do me one. I feel like it's a small favor. It might be a big favor to some of you, but do me one small favor and just go rate and review this podcast. Go to iTunes, go to Stitcher, go to wherever you listen to this podcast and rate it and review it. If you send me an email, you can just send it to my personal email address, brian.tripp@gmail.com. brian.tripp@gmail.com. Send me an email with a screenshot of what you posted. Just send me the screenshot and your mailing address. I'm going to send you this t-shirt for free. Don't have to pay for shipping or anything. I've got a lot of extra. Make sure you put your size in there. I need your mailing address and your t-shirt size, and we have limited amounts. I don't even know if we have any mediums left. So like your options are large or extra large. You can put medium in there. I may have a couple of mediums left, but put your size, put your mailing address in there, and we'll get this mailed to you. Guys, we love you so much. Thank you for supporting this show for so long. We love you, and let's get into this week's episode. What's going on, everybody? It's Brian Trippe. Welcome to another episode of the Real Estate Investing Live podcast. We interview the very best real estate investors, entrepreneurs, and business leaders all throughout this great country. And today, I am super excited. We have an incredible guest, Mr. Eddie Speed of the NoteSchool. How's it going today, Eddie?
I am awesome. How are you, Brian?
I am doing fantastic. I'm excited to get into this interview. This is 145 or so episodes into this podcast, and we have yet to talk about notes. So I am really excited to get into that. And you are the authority when it comes to creative financing, creating these notes, creating structure, creating deal structure. Let's just start right there, right off the bat, Eddie. Tell everybody who you are. Kind of give a little bit of a taste, but tell everybody who you are and what specifically you are up to.
All right. Well, I founded NoteSchool about 20 years ago. I started in the industry in 1980, so I'm kind of an old guy.
So I was born in December of 1979, so for a little perspective there.
So I started in the business. My original business, I got started with my father-in-law and a partner, and they mentored me and got me started in the business. I was a kid. I was 20 years old. So, and I got started with them actually buying seller finance notes. Right? Now, I've done a lot of things since then, and I still buy notes, but I also help real estate investors, and we'll talk about all that. But NoteSchool really, if you ask me what it kind of does, is it tries to find a void in the market that creative financing could fill. And I've done for 20 years, many different things in trying to fill that void.
So let's talk about this. Eddie, you kind of left me hanging there. I want to talk about this. So this is a subject that I feel like there are a lot of people who are trying to teach this, a lot of people who are talking about this kind of stuff. I don't want to say you invented it, but I mean, you're one of the original guys in this space to start really, trying to figure out a creative way to do something. A lot of people talk about creative financing and things like that. But right now, Eddie, when we talk about the landscape we're in, the real estate landscape we're in, where it's harder and harder and harder to find really good deals, how important is it to have this tool in your tool bag?
Well, let me say this, Brian. There's 3 reasons that a wholesale deal won't work, right? A wholesale deal or a fix and flip deal. Reason number 1 is that the seller simply will not accept your discounted price. Right? The obvious. Reason number 2 is they can't accept it because they owe more than you could pay. And reason number 3 is the property has somewhat of a little weird factor to it.
Okay. What do you mean by that?
It could be a house on some acreage. It could be 2 houses. It could be, there's something, most wholesalers, either in the past 90 days through the next 12 months, I'm comfortable in saying, and you know this to be true, 200 of the top 500 guys in the business will come to NoteSchool, right? That many guys needing to reinvent themselves, because wholesaling alone means that they're throwing an incredible amount of offers in the garbage can for those three reasons, right? So if a property has a weird factor to it, that doesn't mean it's bad, but most people are wholesaling to the HGTV buyer, right? I mean, that's kind of who's really buying these houses. It's somebody that, you know, the wholesaler's out there working the deal and putting it together, and somebody that's, you know, not wanting to have that machine, that acquisition machine, that's who's buying it. And of course, HGTV has changed the world, and who does that. But there's a lot of properties that would be better for an owner than they would be for a rental.
Got it. I want to start peeling back these layers, because there's so many different ways to do this. And I heard from a mutual friend of ours that you've done approximately how many transactions, Eddie?
40,000.
Okay. So you've been around the block a little bit.
Probably 50, to truth be told.
So you're not just some, guy that's flash in the pan that just came out of nowhere. This is something you've been doing for going on 40 years.
Yeah.
So let's peel back some of these layers to all the different things that you can do. Just truth be told, there are a lot of wholesalers that are going to be listening to this podcast. So let's talk to that wholesaler for a second. And you mentioned the property, they just won't accept the low cash offer. But then you said that number two thing that's really interesting is you said they can't accept the low cash offer. First of all, what do you mean by, I know what you mean by that, but talk about what you mean by that. And then talk about some of the ways that we can actually solve that problem.
All right. So the first way is that you're offering 70 cents on the dollar for a piece of property. So a piece of property is for sale for just $100,000, just nice round number, right? Property's for sale, fair market value for $100,000. Wholesaler comes in there and offers $70,000. Now, if you're in Phoenix, or if you're in Denver, or if you're in a bunch of hot markets, probably Atlanta included, you're more like 78 cents on the dollar, maybe 80 cents, which means you got a really tight margin probably. But the truth of the matter is, even at that, the customer sees the discount, they don't see what you're giving them, right? So that deal ends up in the trash. Now, you said it right. There's other people out there teaching people to buy on terms. But let's just say it like this, Brian. I could be a junior high student playing B team football. Or I could be one of those guys that play for, what's that team they're called over there in Alabama?
I think you already know. I want to hear you say it.
Yeah. Or I could play for Alabama, or I could play for whoever, Dallas Cowboys, you name it, right? All of them could check yes in the blank. I play football. There's just different levels. I think the fact that the guys that are the biggest in the business are coaching with me is a reflection of we are taking it to a different level. You got to be more creative than just zero interest. But I have learned that of about 20 offers, most high volume players are closing about 1 out of 20. That means 19 people you're not converting. And of those 19, if you just kind of visualize that, you probably have 7 to 8 real possibilities to create a terms offer, right? You only have to close one of those to double your conversion. Mm-hmm. Bam. That's a lot of money.
Yeah.
So this is why we coach people to do this. In my career, I've bought a lot of seller finance notes. My executive team has bought an excessive amount of notes because I have a bunch of people that run my companies that are from the big, corporate companies that bought seller carried notes. So our company cumulatively, executive team has bought $3.5 billion in seller finance notes. So let's just say that we have seen more seller finance notes than anybody. I think that's a fair statement. So we have first of all, we've seen what's possible, and we wake up every day thinking about what's possible. And that creativity allows us to make so many different approaches into how you could get a seller to carry terms, right? That's one way. You are solving, that's the number one that I told you that's a problem, right? You are able to pay a retail price, Brian. I'm going to say this twice, right? Because we really need to bake on this. You are paying a retail price, but you are getting wholesale financing. Let me say it again. You are paying a retail price, but the way you're configuring the financing around it, it equals wholesale.
So I want to come back to that, but I can't let this go, Eddie. We can't just gloss over the fact that you, in just so many words, basically said that you're the Alabama Crimson Tide of creative financing. Is that what you said?
Well, you can draw your own conclusions.
Okay. All right.
I've been to the dance a day or two. Let's just say
I just want to make sure we were on the same page there. But what you just said is so unbelievable, and if it didn't blow anyone's mind, then they didn't hear it right, because this is huge, and I want to spend the rest of the show kind of dwelling on this fact, because this is enormous. You're paying a retail price, but you're getting wholesale financing. You're getting financing at rates or at terms that you just can't go out and get anywhere, that you're actually developing. Unpack that a little bit more for us, Eddie, the magnitude of what you just said.
Well, the way that you can structure the financing with the seller, is think in terms of no bank, no mortgage company would ever agree to it. But let's go into the psychology of the seller. You ever meet a seller that's so cheap they won't even pay a real estate fee? Right? Right? That is your perfect customer. They are so cheap, they won't even pay a real estate commission, because they want to call their brother-in-law, they want to call their mom, they want to call their kids, and they want to say, got the house sold. And when they say that, the next sentence is what? We got our price. You're right. Nobody says they clobbered me on terms. Right? I agreed to the craziest stuff you could ever imagine. That closing statement, contract sales price, was their litmus test of success or failure.
No. I want to talk about this. You just talked about the psychology of the seller. Let's talk about this, because this is important here. For me, it seems like, because I'll go out and I'll put, not to your level, obviously, but I'll go out and put a little creative deal together. I think I did pretty good, pat myself on the back a little bit. But it's 1 out of 20, it's 1 out of 30, it's 1 out of 40 that I can get to actually agree to suit what I consider to be like incredibly favorable terms for me. Yeah. What would be, give me some examples of wholesale financing.
All right. I had a student this morning, okay? I mean, like, this is as real time as it gets, right? Student called me this morning. He says, Eddie, I've got a property that is worth $220. There's a California HGTV buyer that bought this house in Weatherford, Texas, which is 30 miles west of Fort Worth, still in the Metroplex. Spent too much money rehabbing it. It's beautiful. It is beautiful. He's had it listed for 100 days. He started at $250. He's dropped it to $240, and it won't comp out at any more than $220 or $225. And he said, I talked to the realtor, and the realtor knows exactly what the deal is, but her client has that number in his head. And he said, so my student says the only way I can get to that number is he's got to basically be the bank for me. And she said, I think he would do that because in his mind, he just can't lose money. So we discussed the offer. We would do two notes. One note, sales price was $240. One note would be $200,000. 2% interest, Because then this guy's mind, 0% is not going to work. You can't pitch 0% every time. There's a myriad of ways I can disguise the discount in the financing they're doing. And I would rather have long-term than short-term with zero interest. So we did 2%, 30-year, $200,000 loan. Remember, it sold for $240,000, right? And I said, then he's going to sign a note for $40,000. It's not going to be secured by the real estate, and it doesn't matter if it's secured by the real estate because it's above the equity. So what good would being secured by the real estate even do anyway? That loan is at zero interest, zero payments, half due in 10 years, the other half due in 15 years. I said, that's how you can pay 110 cents on the dollar for a piece of property and crush it, and how you can monetize your way out of it.
So take us through the rest of that example. What is happening in 10 years and in 15 years? What is allowing you to actually structure it that way? Why does that benefit you?
Because he's going to resell it on a wrap note.
Okay, let's talk about that.
Okay, so a wraparound note says that here is an existing mortgage. And when he writes this loan with the seller, he's going to make sure that it's wrappable, assumable, transferable, we're going to put about 40 other terms in that agreement. There's way more than just interest rate and term, right? So we're going to pack all that in the agreement, and then it's going to provide that you're going to be able to sell that loan and do another $200,000 note that's at 7% interest, right? And that loan means that you're paying 2% and you're collecting 7%. You're just like a bank. You're making 5% on essentially money that wasn't even yours to loan out. That's what your bank does.
So you're selling the property to someone else and you're collecting a little middleman fee there. What happens to the additional 30,000 or the additional money?
How we will structure that is on the wraparound note. We're going to put a balloon on it. Okay. So
balloon on the whole thing.
In 10 years. And that's going to, and as the 2% note is amortizing down, the principal amount of that 2% note will go down much faster than the 7% note. And mathematically, that's going to give me the money to pay the balloon. So I'll be able to sell the property for $220,000 with $20,000 down, collect a monthly payment, no kidding, of about $600 a month for 10 years. And then the accelerated amortization of the 2% note versus the 7% note that I'm collecting basically gives me the money to pay the balloons. Now, Brian, let me tell you what's going to happen in real life. Okay. I'm never going to get to year 10 and I'm never going to get to year 15. Right? Because what's going to happen?
Probably the person that you sold it to is going to default or is going to want out or sell.
The guy I sold it to is a penalty box buyer who has perfect credit. He's just for some reason not bankable. He's self-employed. He has high commission. He has high bonus. Maybe he has an ITIN card, and he's here, but in paying taxes. But he's in other words, just because you can't get a conventional mortgage doesn't mean you're bad. And the way I advertise is going to find me a perfect buyer, actually with perfect credit. But the deal is, the guy that did that note, he's going to get anxious. And he's going to call me prior to that payment becoming due. And he's going to say, you've been telling me about once a year you could buy my note. Tell me what that means. And I'm going to buy my own note at 40 or 50 cents of what's owed. I've been buying discounted notes for 40 years. I know how these people think. Now, if it doesn't happen, I built myself a financial net to catch myself, right? I'm going to be able to honor my obligations, right. But the chances of something better happening to me become very high.
Eddie, is that a typical transaction for you?
Let me tell you what's typical for me. What's typical for me is a real estate investor says, I'm a hot shot. I'm buying houses. I'm doing good. I just feel like I'm throwing too many deals in the trash. Show me how to craft a deal and make terms that sounds good to the seller, but are very favorable to me. And it could be a deal with no equity. It could be a deal where, in this case, the guy owns it free and clear. It could be another deal where he owes 50%. It could be another deal where he owes 90%. Right. So we can't, like, when you ask me, is this a typical deal? This might be a typical deal where the seller has all equity. But if the seller needs money at closing, if the seller has an underlying mortgage, a lot of other scenarios might force us to structure it a slightly different way. But that's a good sense of understanding. You're saying, how could a real estate investor make a ton of money, $20,000 up front and $500 or $600 a month for 10 years? A lot of money. On a deal he paid 110 cents of what the property's worth.
Right.
It's how you craft financing around it.
Mm. And then you said that there are lots of ways to disguise wholesale financing, and that might have to do with what you just said a second ago with trying to structure it where the terms are favorable to me, even though they appear as if they're favorable to the seller. Is this just one example of that?
It's just one example. There's a lot of different ways to do it. It's like we did the $40,000 second note, right? It's not really a second because it's not really even filed against the property. It's just a promissory note. But the guy, that extra $40,000 on the closing statement, that's what screwed in his head, right? The realtor can probably sell it for $220 and net the guy $200, right? For cash. Mm-hmm. It's a nice house, it's well done. It's not in a bad area. It's great.
Yeah.
He's overspent, right? He's watched too much Chip and Joanna or whatever on TV, and he's overspent. Now, I'm not saying they're not sharp, but I'm saying to you, he couldn't duplicate what they do, right? So the point is, that's where he's at, and he does not want to call his brother-in-law and say he did his first fix and flip deal and lost money. So he wants to call everybody and say, yep, did just like they did on TV. And all he's going to tell them is what the closing statement said.
I want to go back to something you said also that we kind of skipped over, but you said that 200, roughly, obviously, 200 of the top 500 real estate investors are going to, either they have or they're going to at one time come to NoteSchool. You said it's because people feel like they need to invent themselves because markets, they'll change. Why is it? Is it because markets are changing? Why is it that you see people needing or wanting to read? Are they getting bored? Why are they coming to you, Eddie?
So these are all guys that what I would classify as 100-plusers, right? 100-plus house a year guys. Maybe they really only did 70, but they're in the extreme category. That common thread is this. And by the way, this week, I've been on the phone with 2 at least of the 4 biggest guys in your hometown. You know them and I know them, and they are talking to Eddie Speed because he's helping them, right? So people can't say it's not in Birmingham because I've been on the phone this week with 2 of the 4 biggest guys in your town. Their margins are dropping and their conversions are dropping. The margin, the price they can make on a flip or wholesale is dropping. Yeah. And they are making more offers to get one deal accepted, meaning that their marketing cost is going up. And so they're looking at the market saying, we've got to bring more than just buy low, sell high to our business.
So Eddie, the thing I kind of, in hearing you speak, it's obviously all super, super impressive, especially to someone who may not have heard a lot of this before. You're probably blowing a lot of people's minds right now, for sure. But the one thing I can't help but to kind of go back to, just playing a little bit of devil's advocate, is, I know to be super successful at anything, you need to stay hyper-focused. And you've got the guy who may be wholesaling 100 deals a year. And you got the guy that maybe are just doing nothing but turnkey rentals. You may be talking to some of these people. Maybe doing nothing but this one thing, and they've been hyper-focused. And now it's almost like you are kind of coming in and showing them a way that's really going to reinvent who they are at their core. Do you feel like that's something that they need to do, you would advise them to do, or continue to maybe if margins are shrinking a little bit, it's okay, let's weather the storm?
Well, I can tell you that all of their vendors that support their business tell me they have to make a change. The guy that there's common threads, right? They use high volume marketing experts. I know those experts. They use expert negotiation people that are the ninjas in helping you kitchen table psychology. They use the same accounting firms. They use the same virtual assistant, firms. All of these people that you and I know, and every one of those people who have been to NoteSchool in the last 90 days all tell me exactly the same thing. They have got to do something other than buy low, sell high. And you brought up a good point, because we all understand the shiny object syndrome and chasing a squirrel. And trust me, anybody that's successful in our business probably struggles with that a little bit, right? Because that same trait that has made us good at it also means that we're looking for the next new thing, right? So is this just a new thing that defocuses you, or is it something essential? So let me ask you a question. You're an active real estate investor. How many hours a week do you work on deals that don't close?
Not very many. I'm not your average real estate investor. I'm probably a bad example, maybe 5.
Okay. That's a ridiculously low number. You know that, right?
Yes, because that's not my full-time focus right now, but yes.
Okay. But if you spent 5 hours a week on creative financing, you could make the same transactional income and get a check for 10 to 30 years.
So what I hear you saying, Eddie, is that it's not just like reinventing yourself necessarily. It's really to take advantage of the current market conditions that we're in. It needs to really become a way of business, a way of life for you.
Well, we came out of the last real estate cycle where you could just buy properties at a discount, right? Real estate was on sale, and so you could just buy it at a discount. And then we've gone into 2015, 16, 17, 18, and every year the competition has doubled, and every year the price is going up. So there's a compression, right? And the compression is the margin you can make is just simply is what it is. I mean, when half the time you're a wholesaler and you're walking into somebody's down their driveway to get to their front door, and you see your fellow wholesaler that you high five on the way by on the sidewalk, and you all have the same pitch. Your only pitch is, I'm going to buy a house from you for cash. And you're saying, man, if I just had something that nobody, my competition couldn't do, and I could, that would separate me, you do. It's called creative financing.
Yeah. So is a creative financing doing something a little bit more outside the box? Is because I kind of heard you say it's you can't just pluck them out, like we were in 2009, 10, 11, 12. Is creating notes, doing some of this creative stuff, is this better for the current market conditions that we're in? Is it better to do this stuff now versus coming out of a recession?
Well, the truth of the matter is we should have been doing this all along.
What do you mean by that?
Well, I mean, if you would have been buying property 5 years ago with creative financing, you would have created cash flow. You can make the same transactional income you can wholesaling houses with creative finance deals. But the deal is that you get $300, $500, $700 a month. And then all of a sudden, if you multiply that times 100 deals, now all of a sudden you've created your own little bank.
Right.
You're creating cash flow every month. And this is my heart for the business. My number one, my why in doing this for others is to wake up and find out that you aren't solely dependent on transactional income. Because I've lived through enough markets to know that can be really good, and bam, overnight it can just change. Mm-hmm. And so I'm trying to, that's the reason I feel like these higher volume guys, they are the best at the game of marketing and sitting at the kitchen table and doing volume of deals, right? But you and I know what they lack is real significant long-term income from deals they've already closed. And if I can show them how to add that to the business, and they're still doing wholesale deals, they're still doing the other business they would have done, they're just converting more deals by having a plan B, that's a game changer.
Yeah. And I guess what I hear you saying is cash flow is the name of the game.
Well, it's a hidden benefit, right? You're closing a deal you wouldn't have closed. You're going to make money on the deal immediately for the deal you close. But I'm also saying that the hidden benefit is that you're structuring something that gives you a cash flow for a long period of time, and you wake up and you do several of these deals, and all of a sudden that cash flow becomes very good to you.
Eddie, you've been in so many, you just mentioned it, you've seen so many cycles. You've seen so many real estate cycles, up, down, every which way. How have you been able to succeed in every market cycle? How have you been able to stick around for all these years?
I've had my head kicked in. I'm not going to mislead you. I've made some mistakes that I don't want you guys to make. So I have not positioned myself a time or two in the market, and I'm a little more seasoned now. And I have become very focused on the principles that I think will run true. Let me tell you what I've always tried to do and what I'm trying to do in the market right now. I'm constantly searching for market voids and how to fix something that when you fix that problem, you fixed a big void in the market.
And that void today is what?
Real estate investors' conversion rates. They're just not. They're not getting anything. If you think about it, if you said, okay, I'm making 20 offers and one gets accepted, okay, or whatever your number is, but just say that's your number. I've polled a bunch of high volume guys and they've given me that number consistently. You have a 5% success rate. You couldn't be a Major League Baseball player and have a 50 batting average, right? Unless you're a pitcher.
50, yeah.
Yeah. So that's a problem. And the problem is you got to fix it. And that is, if you can fix it and not give up your other business, and I'm definitely not teaching you to move away from your successful business. I'm just saying, let's get more juice out of the lemon.
Well, Eddie, I would love to hear more from you. I'd love to hear more about what you have to say about this stuff, especially when it comes to creative financing. There's no way we can do this in a 30-minute podcast, but our listeners, some of you are in luck because Eddie is coming to the Southeast here very shortly in a few short weeks. And I'm going to give the dates real quick. He's going to be in Atlanta at REI Live Atlanta on October 15th. He's going to be at REI Live right here in my hometown, Birmingham, Alabama, on October 17th. And we're going to go and throw this out there too. Eddie's given a one-day class, all-day class. If you're a member of REI Live, it's free. An all-day class on the 18th in Atlanta, which is a Friday, and the 19th in Birmingham, which is a Saturday. It's very generous of you, Eddie.
Thank you. Well, it takes a little time to unpack this. So obviously, when I'm coming to the regular REIA meetings, that's going to be probably about an hour and a half, and it'll be a little easier to follow. We'll have some PowerPoint slides and we'll have some clarity. But then when somebody can come back and hang out with us for a day, then I can show them example after example. The truth of the matter is I never have anybody that leaves those kind of meetings that doesn't have some clarity to, okay, now I can see exactly how I can apply this.
Yeah.
So,
well, I've never been through your stuff, and I've heard you've already dropped some names indirectly, and I know of some big time names that have been involved, that are currently involved in your program, and have learned from you. And I'm so excited for you to come to, especially Birmingham, but I'm going to be in Birmingham and Atlanta. So guys, if you are interested in this, make sure you're signed up. We're going to put all the links in the show notes. Make sure you're signed up to come to the REIA meeting. If you cannot make it to our REIA meetings, either on the Tuesday, October 15th in Atlanta, or the Thursday, October 17th in Birmingham, if you can't make it, definitely get to the one day. Definitely get to Eddie's, where he's going to come and really unpack the stuff for you guys a lot more detail. I'm super excited about that stuff. That's going to be on the 18th in Atlanta and the 19th in Birmingham. We'll put all how you can do this in the show notes. And to get you started, Eddie actually wanted to give you a free gift. And you can go to our website, which is rei.live. So you can go to rei.live, and I'm going to create a link just for Eddie. I'm going to make it /Eddie. Make it super, super easy. rei.live/Eddie. And he's got a book, a PDF download. You can go get that right now. And you get ready, read this thing, go through this before you hear him speak. And if you're not in the Southeast, you're not in Birmingham, you're not in Atlanta, we would love to have you. We'd love to host you, especially for that. If you can only get down for a day, get down for the one day. It's going to be pretty incredible. So, Eddie, any last words? Yeah.
Well, I was going to tell them about the book for a minute. So the ebook I'm going to give them is called "It's a Whole New Ball Game with Creative Financing." And so the spin on it is about the movie that you may have seen called Moneyball, right? And it was about a guy, a manager of the Oakland A's called Billy Beane. And he essentially was said to have changed all of baseball. So he was doing what was contrary to what other baseball people thought. And so I realize that what I'm doing is contrary to how some other real estate investors think, but it's just Moneyball for real estate. I'm just showing people how you could do something so crazy as to pay retail and just be crushing your competition, and the whole time they're feeling sorry for you.
Well, Eddie, you're speaking my language. I'm a big baseball guy, so I'm big fan of Billy Beane of the Oakland A's, the GM of the Oakland A's. Awesome stuff. The analytical guy, this may be the analytical approach, maybe just the little contrarian approach that you guys need to be a little bit more successful at your real estate business. So I'm fired up. I can't wait till October till you get here, Eddie.
We're going to have some fun.
It's going to be awesome. Guys, make sure you're going to these links. We're going to put them all in the show notes. rei.live/Eddie is where you can get the book. And make sure you're subscribed to our podcast. We got a lot of guests on the horizon. They're going to be phenomenal as well. We love you guys, and we'll see you next time.